Good morning. Welcome to Chartbusters. I'm Reema Tendulkar, with me Sonal Bhutra, and let's take a look at the top headlines at this hour. Markets open higher despite weakness in global equities. Metals, banks outperform as Nifty reclaims 17,600. Mid-caps gain in line with the key indices.
Eminent Finance second quarter business update indicates a 75% year-on-year growth in disbursals, while year-to-date growth doubles. Stock surges over 3%.
North American Class A truck orders hit a 5-month high of 21,400 units in August, doubling on a month-on-month basis. Stocks of Ramkrishna Forgings, Bharat Forge surge.
Electra Green Tech is buzzing in trade after the company wins an order to supply 100 electric buses to the Assam State Transport Corporation.
Chalet Hotels is buzzing after it signs an agreement with Delhi Airport to design, develop and maintain a hotel at Delhi. NTPC2 is buzzing after reporting a 62% growth in coal production in the 6-month period between April to August. Hello and welcome to Chartbusters once again. You've got a brand new all-girls team today, replacing the boys on Chartbusters. But it's good, right? For the markets, we could be just the lucky charm.
Oh,
right?
yes. I was just going to say that. It's because of us, maybe.
Maybe. Because the rest of Asia is struggling.
And look at the rally that we've seen today, right? SGX Nifty was indicating a start in the red, down around 30-odd points. But Nifty is up 110 points as we speak. It is at the day's high. And the banking names are really leading to the rally that we are seeing. Across the board, Reema, there's a lot of buying, be it metals, be it real estate, be it banking names. So it's a good time, right, to get a technical check on the markets as well. Let's welcome Aditya Agrawal of Invest for Edu for a technical check, as I said. Aditya, good morning. Thanks a lot for joining us. Well, despite weakish global cues, we are seeing a strong start as of now, at least for our own markets. Do you think this momentum will continue?
Good morning, Sonal, and thanks for having the show. Clearly, like I said last week as well, our markets are on a different mode altogether. Looks like they're on steroids. While the US markets look a little wobbly, our markets clearly are outperforming. Just to mention, for the day, 17,700 to about 720 is an immediate hurdle. But my sense is we are going to cross that easily, and 18,000 should be the target on the Nifty. Bank Nifty is something which has been outperforming last week as well. We had seen an outperformance on the Bank Nifty. Today, from the morning session itself, Bank Nifty has been outperforming. We are clearly trading above the recent pivot high of 39,700. If it manages to close above that level in trade today, my sense is it is going to test levels of 40 to about 40,400 on the upside. So overall, I believe it is the Bank Nifty that is going to lead the rally. Coupled with that, metal pack is something which is also looking very attractive on charts. So both, my sense is banks and metal could be the names which could drive the rally in the Nifty, which could really take us past 17,900, closer to about 18,000.
And supporting the resilience, the up move that we're seeing in the Indian markets is the economic data coming out. S&P's, manufacturing as well as services PMI, which gets captured in the composite PMI, Purchasers Manufacturing Index, has shown a substantial increase on a month-on-month basis. The composite PMI, which is manufacturing plus services, comes in at 58.2, which compares with 56.6. So it's a good 120 basis points increase that we've seen on a month-on-month basis. So there is improvement seen in the month of August. So at a time when we're talking about whether the US is not going to go into a hard landing, whether Europe is in recession, how deep could the recession be, and worries about growth in China, etc., India's economic growth continues to march on pretty well. So that's just a quick update on the India data, macro data watch. But let's turn our attention then to our special segment where we'll get you a few ideas for profit from Money Control Pro. Bharat Gianani of moneycontrol.com joins in to talk about a stock that he's tracking very closely.
We'll speak on Restaurant Brands Asia Limited. The company has aggressive restaurant opening targets for the India operation and aims to open 75 new restaurants in the current fiscal. The company has received encouraging response for the cafe business and has upped the cafe opening guidance for the current fiscal to 250 from 200 earlier for the India operations. The cafe business would contribute about 7% to the average daily sales of the restaurants for the India operations. For the Indonesian operations, the company is in the recovery mode and expects to reach pre-COVID level of average daily sales next month. The company has unleashed marketing strategies, as well as aims to launch a slew of new products for the Indonesia business. The launch of Popeyes franchise in the Indonesia market will be an additional growth trigger. We expect a significant margin improvement from the current levels as the company gains scale and the product mix improves. As far as the valuation is concerned, the stock is trading at 15 times FY24 EV by EBITDA estimates, which is at a significant discount to other listed quick service restaurant players. We expect significant re-rating from the current levels. Long-term investors can add the stock in the portfolio.
Okay, Bharat, thanks a lot for joining us and taking us through your pick. With that, we'll slip into a short break now. More news and updates will follow on the other side of this break. Hi, welcome back. Well, markets continue to trade in the green. However, they have come off from the highs. So the Nifty is up 95 points. We have Bank Nifty, which was up 0.9%, is up 0.7% as we speak. But a lot of stocks in the Nifty space which are buzzing around. Reliance is one of them. It is trading higher after Morgan Stanley has raised its target to 3,085 rupees a share on the stock. Sonia is joining us to tell us more on this one. Sonia.
So at the onset, let me say that Morgan Stanley was in any case bullish on Reliance Industries, but now they have named it the top pick in the sector and they have raised their target price on Reliance Industries to 3,085, which is much above the current market price. They believe that the fourth investment that Reliance Industries has made to the tune of $50 billion over the next 3 years. The progress is very firm on that. The investments have been made across all their verticals, whether it is chemicals, 5G, retail and new energy. And because of this investment, the company's earnings are expected to double by 2027. Not just that, Morgan Stanley has also said that this time around, the investment looks more feasible and it's supported by a 1.5 to 2 times operating cash flow and EBITDA compared to last time. So that gives them incremental confidence in both the investment cycle as well as the stock for the longer term. Back to you.
Okay, thank you very much for that. Let's also now go across to Nimesh. He's standing by with details of our standout brokerage of the day. Nimesh.
Hi, Rima. So today's standard was on ABB. The stock is under pressure today after Credit Suisse has downgraded the stock to underperform from neutral, and they've written a target price of 2,600 on the stock. Now, the key reason for the downgrade is largely because the stock has rallied over 76% in the last 1 year, and even in the last 3 to 6 months, the stock is in a rally of between 30 to 50%. Now, while Credit Suisse believes that, yes, they're seeing an evidence of investment cycle picking up, but after the sharp run-up, the stock trading at close to over 70 times FY24 price to earnings implies a much higher expectations in the street. Now, on DCF, it seems that the company is implying a 20% CAGR for the next 20 years and at an all-time high margin of 12.5%, which might not be the case. So, and largely because of elevated valuations, today they have downgraded to underperform. Now, within the capital goods space, they maintain an overweight on L&T, which is their preferred pick, and they also have a preference on Siemens over ABB, largely from a valuation point of view. But after a big run-up, today Credit Suisse has downgraded ABB to underperform from neutral with a target price of 2,600.
Nimesh, thanks a lot for joining us with all those details. With that, we'll slip into a break now. Tamil Nadu Mercantile Bank's IPO has opened for subscription. The management will join us on the other side of this break.
Welcome back. Tamil Nadu Mercantile Bank's 792 crore IPO has opened for subscription today. To tell us more about the issue, we're joined by the outgoing MD and CEO, KV Ramamurthy. Good morning and thanks so much for joining in. The first question is, what is the requirement for getting listed when your CRAR is already at 20%? Did the RBI mandate you to get listed, sir?
RBI has been asking us to get ourselves listed for the last couple of years, in fact. That's the reason we filed our DRHP sometime in 4th September 21, in fact. I think we took a little more time in getting the final approval from SEBI. I think it is more a compliance function as of now, since some our branch licensing is being held back by RBI, and we are not in a position to expand our network on account of this fact. And for that, it's a mandatory requirement for ourselves to get listed in the market as early as possible. That's why we are here, in fact, despite the fact that the present capital adequacy ratio is little comfortable at this point of time.
Okay, so RBI has asked you guys to get listed on exchanges. But the other issue really is, Mr. Ramamurthy, that there are court cases against 37.7% equity of the bank. Shareholding and ownership of the bank is a key concern for investors. What is your view on the same?
Yeah, I think these ownership disputes and shareholding disputes have been haunting the bank for quite some time, and various disputes are being handled at different levels as of now. And till yesterday also, there was I think FIA, some court case in SAT was there, in fact, and against this IPO also. That was also, I think, dismissed by the SAT authorities. And as of now, with all these issues in place, bank's performance has been decently poised for all these years. And our earning ability as well as the dividend paying capacity has never been in question all these 100 years, in fact. But for that 1 year wherein, due to COVID-related uncertainty, we were held back from distributing the dividend. This is an enviable track record of dividend distribution record, which should give a lot of comfort to the fresh investors who are stepping in at this point of time.
Got that. So another worry is that nearly 20% of your loans, 19.6% to be precise, are under SARFAESI. How can you recover them, and how much will be the loss in terms of recovery versus the actual amount lent?
I think 99% of not loans, in fact, 99% of the NPA accounts must be under the SARFAESI Act, in fact. And I think when we have initiated SARFAESI action against the borrower, some of the borrowers choose to go to different courts, in fact, for asking us to pay. But only thing is, the system, SARFAESI system provides for when people go to court, I think they will be paying some amount upfront and then going to court. And some part recovery will be happening at that point of time. And our loan book is almost 50% of our loan book now. By and large, it comprises of some collateral security. That is the comfort level. And I think that's the reason why we are in a position to enforce our securities a little more effectively when compared to our peer banks also. And that's the reason why our asset quality is under better control as of now. And we are not foreseeing any major threat from that litigations on account of the SARFAESI initiation.
Okay, around 41.6% of your book also is under moratorium. So how much do you think of this can slip into NPAs in coming quarters?
Moratorium period is over, I think. Only concern till the other day was the restructured book. In fact, it has slightly gone up from 0.5% of last year to almost 2.84% for the financial year ending March 22. Out of that, again, the latest numbers, I can share it with you that not more than 18 crores have slipped out of the restructured book. We are not anticipating any trouble in that because most of the cash flows are improving as of now. And our advances book is mostly dominated by RAM portfolio, small ticket side advances. And there again, our MSME components are, I think, is hovering around 40%. When that is the case, I think cash flows, when they are improving in the system, we are not anticipating any major panicky situation at this point of time than the COVID-related uncertainties.
Okay. So what about regional concentration? Now, Tamil Nadu forms about 75% of your business or advances. Do you plan to diversify into other geographies, or will you remain concentrated in the south, especially in Tamil Nadu?
To this, I can answer in two ways as such. Yes, Tamil Nadu concentration may be seen as a weakness in the system by somebody, but I think as long as the Tamil Nadu is a state which is fourth largest and then contributing significantly for the GDP growth of the entire country, I think with our network of branches spread in mostly rural and semi-urban areas, we were not found wanting on account of meeting our growth aspirations from Tamil Nadu also. But especially when the branch licensing is going to be liberalized, we will be exploring the opportunity of opening branches in those areas where we are not representing. Maybe in that process, some of the future network, maybe in non-Tamil Nadu area also, the percentage of business from Tamil Nadu may be progressively coming down when we try to expand ourselves in the other areas. And that will be happening more by way of digital banking units also. When that happens, the geographical concentration is not going to make a huge difference to our physical presence. When that is the case, the percentage of business, as we are saying, 76%, may slightly come down over a period of time from the concentration, regional concentration may get diluted over a period of time as such.
Okay, Ramamurthy, then let's talk about some guidance. Post this fundraise that you're doing, how do you see return ratios panning out? What is the credit cost guidance for you?
I think this particular fund which we are trying to mobilize at this point of time, this is going to be the growth capital which will be availing for our, I think, capacity building exercise to match our growth aspirations at this point of time. I think when we say that what is going to be the future impact of this one, yes, temporarily, I think our ROEs and ROA may get affected within a 6 months period or so. But with the growth aspirations, when the industry is likely to grow at a decent CAGR of more than 10-15%, we should also be in line with that growth aspirations of the banking sector. And when we grow at that level, I think we should be able to maintain decent ROE and ROE in tune with the past performance as such.
Can you talk a little bit about what will drive your growth, which is the segment that you will focus on?
Our strength remains that relationship banking, and for that, concentrating on MSME has been paying decent dividends in the past to our efforts. And our bank is so unique in so many ways that our discretion lending powers with our branch managers is still intact. We have not centralized everything. When that is the option, I think major focus will again be there on agriculture, MSME, and retail. And within these components, again, MSME is going to be the more focal area when things are, after this unprecedented uncertainty is over. That is giving some confidence for us that I think something will start happening in a much better way, as a lot of capacity building has been kept on hold, and that will be our area of expertise. We will be doing justice for the aspirations of this particular segment as well.
Okay. So last question before we let you go, and this is an important one because there have been many whistleblower complaints in your bank. Can you explain what is happening here?
I think it's an organization with a 100-year legacy. In fact, I think when that is the case, I think when people are seeing the other side of it, whatever it has been there, it has been some transparency has been there in the system. Whistleblower policy is a policy which has been accepted by the board. In fact, it is in vogue. And all these complaints are addressed in the logical fashion, and these have been taken to a logical end as such. And the more and more complaints come, that should not be seen as a weakness in the system. In fact, that be seen as a strength also. We'll be, wherever it is to be checks and balances need to be built in the system. I think the improvisation will also be happening. And we should not be seen as a, I think, negative factor. I think over a period of time also more of transparency, more and more of openness in the system that will make the organization more nimble-footed in at least living up to the expectations of the all stakeholders in this as such.
Mr. Ramamurthy, we'll leave it to that. Thank you very much for joining us on CNBC-TV18 and wish you all the very best for the IPO, which is currently open. Well, for the markets, we are outperforming the global setup. Hang Seng is down, for instance, more than 1%. But this week, we're light in domestic cues. So in the absence of domestic cues, the focus will be on the global sentiment, the news, the macros which come out. And on Friday, U.S. markets had reported the jobs data, which at 315,000 jobs added in the month of August, it was in line with economists' expectations. It was not so high that will result in the Fed being more aggressive in its rate tightening cycle, but it wasn't so low, which gives economists confidence about the resilience of the U.S. economy. So the next print to watch will be the 13th of September inflation print. So as we wrap up on Chartbusters, we'll get you some important comments that we got in the markets. Earlier today, we caught up with Ed Yardeni of Yardeni Research. Listen in and thank you for watching this show.
The Fed will in fact proceed with the 75 basis point hike in a few weeks at the next meeting in the FOMC. As you folks pointed out, there's still that September 13th CPI to come out. I think it's going to be a remarkably good number. I think it could be 0 or slightly negative, because we know that gasoline prices came down a lot during the month of July. We know that car prices have come down and that other prices have been moderating. If I'm wrong and we get a surprisingly high number, then I think the Fed's going to go for 100 basis points on the federal funds rate. And what's ahead is the Fed's commitment to bring inflation down. And as Mr. Ferguson said, the inflation rate remains way too high, way too much above 2%. I think we're going to be in a range for a while, a trading range for a while. And I think the portfolio strategy is most investors who are in stocks know that they're in it for the long haul. It's very hard to trade them. It's very hard to play corrections. I mean, I've seen plenty of people who told you exactly the right point to get out of the market and then forgot to tell you about when to get back in. So by the time they told you it's okay to get back in, you're back to where kind of you started. Meanwhile, you missed some dividend payments and all that. So I think the bear market's over. I think we're going to be in the consolidation phase here. We're not going to go straight up for the stock market. Money is going to leave China and go to India, and that may continue to also support the Indian market.